XRP and HBAR's momentum is set to continue. ArchX is adding State Street, Fidelity, and LGIM offerings to the XRP Ledger and Hedera's blockchain. This is the same ArchX that just a few months ago Tokenize, one of BlackRock's financial tools on the Hedera network, caused a whole problem. But to see ArchX continuing to build, not only on top of Hedera, but now incorporating, or better yet, extending their relationship with the XRP Ledger, this shows that BlackRock is only for now the king of tokenization. In this episode, guys, we're going to break down this story, as well as I'm going to explain to you just how useful these money market funds, these tokenized financial tools, are going to be. Got a lot of insightful information to share with you alongside this story. And before we get into it, let me introduce myself. My name is Wade Teamer, and you're listening to another edition of the DHN Crypto Podcast. I've been in the space since 2019, and I've researched over 1,000 digital assets. The number one reason I run this show is to share all that information with you. All I ask in return is you hit that like button. Don't think of it as for me, though. Let's do it for crypto. Right now, we need to drop it for XRP, going absolutely insane. $1.30? $1.30, ladies and gentlemen. I ain't got nothing else to say. ArchX adds State Street, Fidelity International, LGIM offerings to regulated digital platform. We're going to learn a lot more about money market funds and traditional financial instruments in this episode, guys, because that's what ArchX is looking to build on top of Hedera and the XRP Ledger. So, 20th of November, coming out of London, UK-based FCA-regulated exchange broker and custodian for digital assets announced that it has added State Street, Fidelity International, and legal and general investment management funds to the range of tokenized real-world assets that it offers, starting initially with providing tokenized access to certain State Street global advisors, Fidelity International, and LGIM money market funds through beneficial ownership tokens minted and offered by ArchX, representing the holdings of clients of ArchX in such funds. Now, I like the education that they give us here. Providing digital representations of money market funds is proving to be a popular use case for tokenization and blockchain technology, as it opens up a potential new audience for these types of yield-bearing products that historically have been challenging to access. Yield-bearing is going to be a very important topic in this episode, such as holders of stablecoins or fintech firms holding cash as treasury. Additionally, the money market fund tokens also have the potential to be used as collateral in the form of a yield-bearing currency that can be used for payments between counterparties. So another important lesson I learned coming out of the Hedera ArchX BlackRock situation is these newer financial tools that they're trying to introduce, specifically money market funds, they're used already a lot like stablecoins, which would explain why that seems to be the number one item when it comes to tokenization. What's being tokenized? It seems to be a tool that was already a digital form of a US dollar. I found that to be interesting, but the tokenization of these products on blockchain is what takes it to the next level. Now, we're going to read this second portion here just to give you an idea of the specific products that will be coming to Hashgraph and the Ledger. The first funds to be listed on the ArchX platform are the Irish domiciled State Street USD GBP Euro Liquidity LVNAV funds, the Fidelity ILF, basically same thing, as well as the LGIM Sterling USD Euro Liquidity funds. ArchX will issue beneficial ownership tokens representing the holdings on Hashgraph, XRP Ledger, and Arbitrum. So, before we jump over and look at these products individually, I want to give you a bit more context as to what we're looking at here. Shout out to the homie Dimitri, to my brother Dimitri, for sending me this report from Calistone that is titled "The Future of Tokenized Yield-Bearing Assets as Collateral." So we're getting into the conversation of institutional grade money management. I am also learning that, as they mentioned before up here, where traditionally the people who are in control of these money market funds, these investment vehicles, they have to deal with a lot of cash. The redemption for these tools can only be done in cash right now. And if you know a thing or two about large scale cash management, we're talking north of 100K, that process can get very complicated. Tokenizing it on the blockchain is meant to address that. That's the whole purpose here. And that's the understanding I got from this article here. They say yield-bearing assets like money market funds have long been a staple for investors seeking to manage short-term liquidity needs, particularly for a larger corporate and institutional investors like pension funds, which have limited options for managing cash needs due to constraints on unsecured exposure to bank deposits. Money market funds offer an invaluable cash management vehicle, diversifying credit risk and achieving returns aligned with short-term money market rates. They are designed to be redeemed by investors for cash at short notice, typically offering daily redemptions with same-day settlement. Typically, that's what you will be used to if you've been in this market for a number of years and have moved these instruments around before. However, money market funds are not typically used as collateral due to operational and, in some regions, regulatory barriers. They need to be converted to cash first. Indeed, around 3/4 of collateral is posted as cash, but the process for doing so is hobbled by inefficiencies. Tokenization can simplify it. Lastly, if money market funds were tokenized, the investor could simply pledge their tokens to the counterparty as collateral without needing to redeem them for cash first. The asset could be posted to an account in the investor's name for the benefit of the receiver of the collateral, meaning the investor retains the yield. When no longer required, they are posted back to the main account of the investor, all executed on a single efficient set of digital rails. And as it stands right now, those digital rails, they appear to be XRP, Hedera, XDC, Stellar Lumens. So this also gave me insight on some of the motivations behind why the other forms of financial instruments are being tokenized. Your treasuries, your bonds, private credit, things like that, right? If the redemption process is similar, where you have to put it in cash first, and then depending on the large amount that you have, that causes more inefficiencies, that would explain why we're seeing such large amounts of these financial products being tokenized so quickly. This must be a much bigger problem than what's being described to us, to the everyday who don't do this on a regular. Very insightful. Now, again, shout out to Brother Dimitri one more time. He doubled down and followed up with this report here in collaboration with ChatGPT. But hey, information is valid. I double checked it. We double checked it for sure. But basically, this is going to give you an idea of what it looked like before blockchain and after blockchain. And I'll leave this independent comment as well under this episode, so that way you can save this for yourself just to keep it for your records. But essentially, before blockchain, there was a lack of decentralized infrastructure. Fractionalized ownership of financial instruments like money market funds was complex, requiring bespoke agreements and manual processes, limited accessibility to institutional investors. Before blockchain, it was difficulty using money market funds as collateral or currency. Also, before blockchain, settlement of transactions involving money market funds required traditional clearing processes, which we know through our education in relation to Stellar, XRP, Algorand, the other payment projects. That process can be very lengthy. So, all the more reason why it makes sense that Fidelity, LGIM, and State Street are now looking to follow BlackRock's pattern. They're looking to follow the road laid by BlackRock. And I got a clip for you that we're going to jump to But before we do that, I just want to drop this in here. So LGIM, the product that ArchX is tokenizing is centered around their European market. However, LGIM has an American arm. See, interested in real estate equity, fishing around the site. They also invest in the same financial products, money market funds, things like that. But outside of the tokenization of traditional financial products, the other part of that conversation, tokenized real estate. There was a story that came out 2022. Correct me if I'm wrong here, XRP holders, you guys remember this, but there was a city in India, if I'm not mistaken, that chose the XRP Ledger to put its property verification documents on chain. That's an early stage version of tokenization, but when you look at ecosystems like an Algorand and the Lawfully application, which is actively tokenizing real estate properties, same thing could easily be done on the XRP Ledger. I have no doubt about that. So I found that to be interesting. Let's jump to this clip here. Yeah, you know him, the Fink man. All right. Why am I bringing up the Fink? Because 10 months ago, ladies and gentlemen, well, we'll call it 12 months ago, because he initially put it in the annual letter to investors, right? Tokenization is the future. This man, he said it. But listen to what else he said is going to come along with it. We got to jump in. Yeah, 2 minutes, 30 seconds. Take a listen.
Bitcoin. We believe ETFs are a technology no different than Bitcoin was a technology for asset storage. We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
Is this the end of mutual funds?
I think, well, a lot of people, it's a wrapper. It's not the end of it, but I would say the dominant form of bringing products going forward will be in the form of ETFs.
Tokenized ETFs. Now, mind you, that was 10 months ago. What have we seen BlackRock do since then? The Build Fund, anyone? Which just expanded to, 3 or 4 new chains? So, to that point, where we need to keep our eyes on is, of course, the #1 source for tokenized assets, rwa.xyz. I need to figure out who created this website because they knew something was coming. They did, and now they're the #1 source for this information. But as you can see, guys, BlackRock started something that other companies, other asset managers, other custodians, they're now following that same blueprint. So, because money market funds can sometimes be used for global bonds, treasuries, private credit, institutional funds, I'd be curious to see what specific product comes out of this collaboration. I know that we will be seeing the liquidity funds from Fidelity as well as LGIM and State Street. But it would take a little bit more digging to find out what's the next stage here. I'm bringing you the context and the reason why these asset managers, combined with $5 trillion, are getting into the blockchain game, getting into the tokenization game. I'm sure in a few months' time we'll have an idea. But I want you to understand, this all came from the Fink man a few months ago. Now, also a few months ago, I opened the episode talking about Archax, Hedera, BlackRock, where that all happened. Before that, though, Archax increases tokenized money market funds, executes first multi-million-dollar transaction in partnership with Onera. So what this was essentially was Archax, an independent firm, going to Onera, an independent tech firm. Archax is responsible for tokenizing a financial tool that BlackRock essentially gave them. They said, here, you guys are doing the tokenization thing. We don't want to touch it directly. We've got a relationship with Ethereum. We're trying to stay on that. But I'll give you this. Let me see what you do with it. Archax takes that BlackRock financial tool, goes to Onera. They got a bit more of a technical infrastructure that was suitable for it. So they combined their efforts. And it was Onera and Archax who came to the decision to make use of Hedera to record these transactions on top of. That was simply what it was. Now, I want you to understand how important that is. This is something that I have come to understand as the adoption model in crypto. You will have one independent company, tech firm, IT firm, 400 or 500 company, right? You'll have that individual entity. You'll have oftentimes a third party that is closer to the crypto space than they are. They will contract that third party. That third party in their toolkit has chosen one of these networks, one of these blockchains to reinforce and support their product. That is the pattern that I have watched unfold in all of these press releases that we have read since 2019. So I want you to take note of the adoption model in crypto. It'll be an entity contracting a third party with a set of tools, and one of those tools will be the network that we invest in and that we fawn over every day. And it could be Hedera, it could be XRP, it could be an Algorand, Stellar. That model is still the same. Now, this piece of information here, this just explains Archax's relationship with Hedera. They received, I want to say, $200 million US dollars in funding from Arbitrum. Arbitrum, we know, Hedera Governing Council member. And when Arbitrum got involved with Hedera, they said that this was going to be our game plan. We know a lot of asset managers who want to get into tokenization. We don't necessarily have the technical infrastructure to do so, but we do know of a company called Archax that specializes in it. That's what we see formed here. Outside of that, Ripple, Archax, they've been together for quite some time. Remember Medico? When Ripple acquired Medico, the custodian? That's when they established their relationship with Archax. It was actually back in 2022. It said here, the agreement represents an evolution of the relationship between Ripple and Archax, which was established in 2022 when Archax collaborated with Medico to offer digital asset custody services to its clients. And we all know, middle of the summer of 2023, Ripple acquired Medico. In this press release from June of 2024, they also mentioned how that was the new plan, was to bring their real-world asset products to the XRP Ledger. So they have Hedera, they have Arbitrum, I believe they have Ethereum as well, and now the XRP Ledger is involved. I expect to see and hear a lot more stories like this now that Gary is stepping down. Now that we have a pro-crypto government, I expect to see so many more stories like this because the market has been waiting. The market has been waiting. They've been studying all of this time. So clearly they know what XRP can offer. Clearly they know what Hedera can offer. Now that the regulatory landscape appears just that much clearer, the way business people operate They acting now in preparation for what's to come. I already see it happening, folks, and we should be following suit. Everybody else is panicking right now, freaking out at the fact that this man is president, but they're overlooking the massive opportunity that's about to hit this market. Overlooking it. I don't want to get too passionate about it, guys, because I will go there. Today was a great day. Great report from my kids' school. They are kicking butt. All right. My two are out here kicking tails and taking names, man. And I love it. And so is this market. So is channel. I got, 100,000 reasons to be grateful. I tell you that much, guys. But we're ending here with this global market overview of RWA.XYZ. Again, take note of this website. It is in the DHN Crypto Starter Kit, which I'm going to pull up right here so I can urge you to download it. All right. These 6 pages will save you years of time. I promise you that. You'll also get the 5 verticals of crypto, which are overarching terms, themes that'll help you understand what comes from this space. Because now that we have regulatory clarity, and it's coming for all assets, that is going to pave the way for DeFi to be mainstream, for Web3 gaming to be mainstream, emerging technologies like AI, IoT, NFTs, the true technology behind NFTs, DPINs, things like that, right? As well as the macro level events, policies, and campaigns that push forward the adoption of digital assets. Do you know how many bipartisan bills were denied under the last administration that I'm pretty sure is already on somebody's desk? Okay, there will be a lot of it. This document will give you the foresight to define it. You also get a criteria for evaluating assets, as well as links to various crypto ecosystems, good and bad. Some we cover on the channel, some we don't. And then at the bottom, tools and resources, you see RWA.XYZ right there. Links to various news outlets. This will give you everything you need to get started in this space. Everything you need. And in 2025 is going to be a brand new version. So be expecting that. With that, guys, that's all I got. Again, want to thank you guys. Very grateful the way the channel has been performing recently. Long overdue. And I'm also grateful for the fact that people are now about to recognize what has been changing behind the scenes for years. So with that, y'all know what time it is. If that money is digital, so is the hustle.